In this video, I want to speak about Euro USD because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is approaching a very strong area of previous monthly support, which was acting as support all across this zone again here and is now once again acting as support here. And as the market just tested its zone, some bullish price action could be expected away from this level. Dropping down on the weekly time frame, however, this is where we start to see some problems because from a weekly perspective, we can see how during this move to the downside, the market actually created one candle of a different color. This means that what we have here is previous support turned resistance, meaning that from here we could easily see more bearish price action be developed. However, if we drop down on the daily time frame, it seems how, at least at the moment, the market is trying to push through this zone. In fact, from a daily perspective, it's even more clear how this zone here, this is exactly the previous daily support, which is now turned resistance. If the market actually manages to break above this level, all this previous resistance would become support. And if we do get the break of this resistance on the retest of the previous resistance turn support, this is where we would have very good probabilities to see a potential rejection to the upside away from this zone, which is actually getting quite strong. So if we do get the break above this resistance on the retest of the previous resistance turn support, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure to drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.